Monday, February 13th, market analysis, Stan Ehrlich. Good morning, 10:15 a.m. California time. We are bouncing pretty darn good this morning. Remember, I usually start with the S&P 500. I'll talk about the DIA and the QQQs and sometimes the Russell 2000 and commodity futures, those that have signals, new ones, or ones that are active, or recent important developments in particular symbols. So let's get on with the S&P. You know, I've been looking at this from the standpoint of the October 13th seasonal October lows, which we talked about a month or two in advance coming up, which happened fantastically with a gigantic ER bullish engulfing buy signal. So far, that is the bottom of the market. Now, that is also the head of a head and shoulder bottom. The June lows, the shoulder, and the late December lows, the last shoulder. We have broken the 200-day Dow Theorist long-term moving average and stayed above it for a couple of 3 weeks now. We have broken the long-term bear trend line drawn across all the important highs during 2022. We have broken the neckline, most importantly, on the head and shoulder bottom formation, which forecasts a minimum upside move to approximately all-time historic high levels, just a hair shy. So I am looking forward to a 2023 bull market. We'll watch interest rate futures occasionally, and they're going to have something to do with it, I'm sure, over time. Now, was the low on Friday the low of this downside correction? That's the problem I'm having, because Thursday there was a bearish engulfing ER official red sell signal, which so far is not working. Oh, by the way, questions? Email me at info@ersignals.com. So we're well above where I would sell short. So anybody that did using the system would have a small loss at the moment. My fail safe is just above the high of Thursday. And that's going to change depending upon the market moves if you're using ER1 and ER3 software, the ER Signals strategy software, which is executed on a 1-minute chart. So it really can't be done very easily on the daily data chart. So, but I know what I'm looking at. I think that's probably right. I think that Friday was the low. It wasn't particularly overbought. Oversold. You don't get oversold all that often in a bull market. It gets overbought a little more frequently because it keeps climbing. And lately, we've been overbought 1, 2, 3 times. The last one was pretty significant and has caused this break. How will I know with some conviction that Friday's low is the past tense low I should have, would have, could have bought on? I think closing above Thursday's high, which will also be above Wednesday's high, which will also be very close to making the second lowest close for the trend, and a little bit higher. It's going to start moving into new high ground and almost the highest high. So above Thursday's high is my fail safe. If it turns down right away, it doesn't look like that at the moment, then I would be still expecting the neckline to hold, which is around 399 in a few days, a little under 400. So that could mean a 12-point break, but I just don't see it at the moment. You know, I'm bullish. Basically, I'm trying to pick turns. Let's go look at the, okay, and the 1-minute chart on the left side of your screen is showing you that although we haven't seen anything serious as far as any dip is concerned in the last 1 hour, big deal, we also haven't seen a new high lately, which I think could happen very soon. Now, we're already up 4 points, so we got elbow room to go up more, 5, 6, 7, 8, I don't know. That would be a very strong day. 8, 10 would be one of the biggest ones we've had lately. And above that's just super. Now, so watch it carefully. Let's go look at the DIA. We might, if we do keep strength here and make new highs, either above today's high so far in the next day or two, or today, we'll be breaking the little bear trend line that I've drawn across the highs of this pennant formation that has developed since early December. Now, or even you could call it throughout November as well, but whatever. So we're right at the bear trend line. Breaking that on a closing basis will probably make new highs for about a week and a half. And slightly above that, you're going to bang, bang into two last significant resistance areas going all the way back to December 15 or so. Yep, December 13. So that's pretty significant upside breakout. And it would indicate that the other indexes are going to probably follow suit. The DIA is not going to do it by itself. Let's look at the QQQ. So we're at an important resistance spot, today's highs for the DIA in particular. The QQQs have been, in the last couple of months or more, the strongest index of them all. Back in late December, it did get very close to making a new low for the whole damn bear market, but it didn't do it. And you could construe it as the last shoulder low of the large head and shoulder bottom, October 13th, December 12th, was that? October 13th is the middle, that's right. And December 25, December 28 for the QQQs is the lowest low for the shoulder, which turns out to be by itself a little double bottom. Second low, last low of the double bottom is a bullish engulfing. Whee! That's exactly what I love to see. Unfortunately, it wasn't oversold within the allotted amount of time, and therefore we didn't turn green like October 13th. Okay, the pattern's working. Nothing wrong on an intermediate to long-term basis. I'm fully expecting, what is today, the 13th or something? Yeah, almost the middle of the month. I fully expect by the end of the month that we should be seeing new highs for the whole trend in 2 weeks. Okay. That's it for the stock market indexes. Let's look at some futures. And that should not have caused everything to disappear. Here they come. Good. Looks like that's the way they were. Crude oil. We had a darn good sell signal a couple of weeks ago. It dropped off for about 6 days, got oversold at support. No surprises, bouncing a little more than I thought. Now, it could come all the way back up to 82.40-ish and be back at a resistance area again, and then finally get down into the high 60s, which would be a huge long-term major breakout, bearish breakout, making new lows since apparently 1 year ago, January 25 of 22. So looming in the near future is a huge downside, major bearish breakout. Wouldn't you like to be short before it did it? I would. I'm looking for a sell signal. I think it's about to top out at 82.50 or 30 or 40, right in that ballpark, a little bit higher maybe, or right now. It's not oversold, it's overbought. It's not even close to overbought. So it's got a little bit of elbow room maybe. Let's see how this develops. The top of the market we got with a bearish engulfing, supported by one a little too early and one late, but it still worked. Next chart. Well, orange juice, I told you, got the most overbought I've seen any chart in years on a daily data basis. That's ridiculous. It got up to the, what was it, middle 90s, 95 or something, 98, I remember, which is extremely, about as rare as a snowball in hell. It doesn't happen, but it did. Look at the size of the break we have had since that extreme overbought condition. Too bad I didn't get any signal up there. That would have been fantastic. It just simply was extremely overbought. I talked about it on that date, which was Thursday of last week. Friday, talked about it starting, and today it just huge downside follow through. Now there's a gap. Gaps are almost always closed. You know what I say about gaps. They're like a black hole in space. They tend to suck price action back into them. So I'm not going to be surprised if we don't come back up to, say, 252-ish in the next few days and then head south again. This could be a breakaway gap. That's one of the gaps of the three kind of gaps that is a little bit less likely to be closed, breakaways. And that sure as heck looks like a breakaway gap. You can't really tell until quite a bit after the fact, frankly. So let's see what happens. Next chart is soybeans. We have made new highs for quite a while, since June. It didn't hold it. It's now back lower on the day after punching through a lot of buy stops. That's not particularly a bullish price action. Another market did this just recently. I forgot, euros, I think, punched into new high ground, and then a day or two or three later, you're making new lows for weeks. This has got to hold here and start to climb again if this bullish breakout potential bullish breakout's going to stick. Otherwise, this is not a good sign usually. Next chart. No reversal yet. Heating oil. We caught the top of the market with a supporting bearish engulfing 3 days later. Again, ER sell signal. So that was a great signal. There's a couple of good ones over here. That's good. Hey, and a good one on the bottom for a few days. It wasn't a lot of money, but it worked. Absolutely, actually pretty nicely. That was a great sell signal that lasted way over a month. And that one was a radical, huge sell signal. Remember, our ER1 gets short the same day the actual trade or signal, that is, takes place. And then we do make the ER1 trade that moment. So we're short on the 9th of March at about 1,700 and what the hell that number is? 1.7726. Okay. And shoulda, woulda, coulda, stayed short the same day. Big move. A lot of money on the first day. Second day's a little iffy because of the rally, depending upon your stop, how close it is. And then boom, 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 down. Okay. So that was a good signal. So far, so good with this one. We bounced off a little support a couple of days ago in heating oil. I've got to say the same thing about heating oil as I do in crude oil. If you start making new lows here, and I think there's a good chance of that, you could have a huge, major long-term bearish breakout if we start closing below 2.33. Next chart. Gold. Aha! We got the top. And a great big red bearish ER sell signal on the high day. We had at the end of last week, or Thursday that is another bearish engulfing, which is working perfectly so far. New low, looks like a new low close below the previous low as well. Since the sell signal on Thursday, we made a little on Friday, and we're making a significantly larger amount today. I think there's a chance we could get a little more follow through tomorrow. But look here, we're yellow, we're oversold. So at any time, the damn thing can bounce somewhat, which I wouldn't like. I wouldn't go short here. If it rallied again, and then we got another signal maybe. Okay, next chart. Corn. Hey, we're trying to break a major long-term bear trend line, which is basically the top of a big pennant formation going back a year. And if that is the case on the closing basis above today's high so far, anytime in the period in the near future, that's going to be a major upside breakout. And I think it's about to happen. We're nowhere near overbought. We got plenty of elbow room to bounce to rally through that line. It may contain a gap. It may contain a very sharp up day. It should. Increase in volume. It should. And a very big range. It could. Next chart. SE, the E-mini S&P 500, of course, is an index. Everything I said about the spider applies to the E-mini with minor exceptions. We bottomed out on Friday, but we did not have a bearish engulfing. So there was no official sell signal on the E-mini like the SPY. Another reason why I didn't particularly trust the SPY. And I said so in the last couple of days. And we'll see if it works out or not. Don't have a lot of faith in it. I'm basically bullish and looking for a buy. Next chart. We can now pretty much eliminate this being a head and shoulder top, deleting the neckline, big sideways trading range. This last trading range of the last week and a half is too much sideways, and this rally this morning pretty much kills the whole idea. Uptrend, slow, nothing to say really other than that. Kind of expecting it to challenge recent highs, 27 plus in this week. Next chart. Great sell signal. We have a new low and a new low. Well, we have a new low, but not a new low. Close today, which is a higher close, which implies it's trying to turn around and rally a bit. We're also oversold on Friday and this morning at the lows. So I wouldn't be surprised if it bounced up to my cursor here. Well, let's see what the first resistance. I already tried that. Well, it might stop it again, 385. give or take a couple bucks. Yep. And then turn down. Might come up a little bit more, but I don't see a trend change here. It's made new lows for a couple of months. I have to be bearish on platinum, except for a minor bounce because of the oversold condition. Next, bean oil. Okay. Barring possible broad head and shoulder top, kind of in the wrong place since the highs in August. Other than that, not too much else to say. I'll keep an eye on the formation. Next, yep, bonds, 30-year long bond, getting oversold, dropped off into the trading range we saw for the last few months, building a bottom formation of some sort, I've been saying. Don't have too much more to say, except for it deserves a little rally because of the oversold condition. The last time that happened, we were oversold for 3 or 4 or 5 days, and it turned up and it rallied quite a bit for a couple of weeks. Actually made a minor new high that didn't go anywhere. Sideways trading range developing, in my opinion, overall. I see the S&P 500 is starting to make new highs here. We're now up 4.6 because I just had an alarm line go off. Let's look at the next chart. I think it's 10-year notes. It is. They're basically the same. Looking for long-term bottom building to develop. New highs, by the way, for the last few months would turn me pretty much flat bullish. But I am tending to be bullish. Basically, I really am, but I have no buy signal. Buying it in this vicinity, a little bit lower than today's lows, might yield something. It would be oversold also. Yes, indeed. I would think so on the 10-year notes. I've got to say that looks like an interesting idea, but I got to get it down a little bit more in the next day or two. Let's call it 112 flat. Silver, very oversold last several days and staying that way and making new lows again. Reminds me of orange juice a little bit upside down. But I can't help it. Don't chase the market. Don't go selling short markets that are oversold. And don't go buying them if they're overbought. Wait for the retracements. It'll happen pretty quick. Just look at what orange juice did on Friday and today. And that's pretty much it, I think. The other futures contracts don't have much to say about, if any. You have a great day. Profitable trading to you. Later.